It's in the middle of the goddamn banana zone. It's been happening. Bitcoin's up 100% since we called the start of the banana zone. It then had a nice correction. It's now at all-time highs. So the banana zone is playing out perfectly. Correction phase one, the first move. We've had the first move. That was the last quarter in 2024. We then have the correction phase, the correction phase, the correction phase. Then we go into the banana zone next phase, phase two, before we have the correction phase. Honestly, I don't see any reason why anything is going to change this cycle. I can be wrong, but I don't think I'm going to be because I put in the work.
Bitcoin has entered a strong accumulation phase across all wallet sizes for the first time since January, reflecting a renewed wave of bullish sentiment. Trading above $110,000, an 18% increase over the past month. This surge is backed by Glassnode's accumulation trend score, which has hit the maximum value of 1.0. The trend began in early May with whales holding over 10,000 BTC leading the charge, followed by smaller holders. This marks a major shift from earlier in the year when most cohorts were offloading their positions as Bitcoin tumbled from its record high of $119,000 to lows near $75,000. Real Vision CEO Raoul believes the bull run is already in motion. According to him, the disbelief phase is fading, and the market is now entering its second leg, where price gains become exponential and mainstream interest floods in. Pal, who accurately predicted the start of this cycle in late 2024, says the current pattern mirrors past market behavior and shows no signs of breaking form. For him, this is the moment where real wealth is made, by those who recognize the rhythm of market cycles and act with conviction. Joining Pal in this outlook is PlanB, the pseudonymous creator of the stock-to-flow model. His latest charts, released earlier this month, show Bitcoin firmly positioned within the post-halving breakout zone. With the options market showing large bullish positions and historical patterns aligning, many analysts believe this could be the beginning of a sustained and powerful bull cycle. If Bitcoin continues to follow the path of mature assets like gold and the S&P 500, it may signal a breakout far greater than most are prepared for.
Moving averages. 200-week moving averages is black line. It's up from 46K end of March to 47K end of April. And note the difference.
Introducing the all-new Ledger Flex. Your next level crypto wallet is here. Sleek, premium, powerful. The Ledger Flex delivers a solid, high-end feel with smooth edges for a more comfortable grip, and that satisfying nostalgic sound you didn't know you missed. Still clicking away in your old Nano S? It's time to upgrade and lock in your crypto gains with style this bull run. Smooth, modern design, built for serious profit. Click the link below to grab your exclusive Ledger Flex. Ditch the rest, go Ledger Flex.
Between the 200-week moving average and the geometrical average, that's the gray line, is increasing. And that indicates a developing bull market. FOMO is building. You can see it, and you can see it in previous bear markets too. If the 200-week moving average and the geometric average have been close together and then diverge again, that's a bull market. Here too in 2017, same in 2013. And here you can see it even better. It's a close-up of that same chart. We talked about the possibility of the 200-week moving average and the geometrical moving average staying close together, and that would indicate steady growth and not so much a 4-year cycle. Maybe it would indicate the end of the 4-year cycle. But now with this increase, you can see it here. It has been close together, and it's diverging again. So I don't know for sure, but in my opinion, this is bull market building. So the last phase of the bull market, the FOMO phase, is about to happen, and we might see a very nice 2025 after all. Realized prices. Realized cost prices. If we look at the overall realized price, that's the black line, including all the coins, including 1 million Satoshi coins that are basically counted at zero. That's at 45K right now, up from 44. The 2-year realized price, more of a medium-term indicator. I find it very useful. It's up from 75 to 77,000. And the 5-month realized price, the short-term buyers, is 92 right now. It's up from 91 last month. And Bitcoin, the red dot, is above them all. So all the realized prices are going up again. Up, up, up. and the Bitcoin price is above all the realized prices. Well, that's how we want to see it. That's also a sign of a bull market. Everybody's in profit. There's not much pain in the market. We'll see what that brings.
As momentum accelerates in the crypto market, PlanB's latest May analysis reinforces what veteran investors like Raoul have been signaling: Bitcoin is firmly in the middle of a developing bull run. In his recent update, PlanB highlights the growing divergence between Bitcoin's 200-week moving average and its geometric mean, a pattern that historically precedes major price surges, as seen in the 2013 and 2017 cycles. This gap is expanding again, while realized prices across all cohorts, from short-term traders to long-term holders, are climbing, indicating growing profitability and easing market stress. PlanB also notes that FOMO is beginning to build, though perhaps his most telling insight came from a response on X, where he clarified that many still confuse price with value. He argued that Bitcoin's price may not have hit $100,000 in 2021, but its value, based on scarcity per the stock-to-flow model, could be closer to $500,000. According to him, Bitcoin remains deeply undervalued, reinforcing Powell's banana zone thesis. The Raoul run hasn't peaked, it's just getting started. Meanwhile, Tom Lee is quietly echoing these bullish sentiments. While mainstream narratives still lean toward caution and fear, Lee is analyzing the subtle signals that often appear before major breakouts. He believes the setup for another explosive move is already forming beneath the surface, suggesting that those paying attention now may be positioning themselves ahead of the next wave.
To making an all-time high, and I think there's plenty of fuel for that. First of all, Bitcoin, which is a leading indicator for stocks, made an all-time high today, and that's 1 month ahead of the S&P. Bitcoin peaked in January 20th of this year at 109,000. The S&P peaked 1 month later. Also positioning, this is from the fund manager survey. You can see investors are underweight US by 40%. It's a consensus underweight. I mean, to me, that's bullish. Hedge funds are adding to their short positions this week, the largest increase in the last decade. That's another sign. And of course, the reason I feel like the April lows hold is because we had stocks see the VIX move above 50 and then fall below 30. As we noted, that has marked 3 of the last 3 bottoms definitively. And it makes sense. When the VIX surges, investors have to de-risk, but then as soon as VIX settles down, they get to re-risk.
Bitcoin breaking into new all-time highs isn't just a win for crypto, it's a broader signal that risk appetite is returning to global markets. Tom Lee notes that historically, Bitcoin often leads the S&P 500 by about a month, suggesting a wider market rally may be on the horizon. Yet, institutional positioning remains heavily bearish, with fund managers underweight in U.S. equities and hedge funds stacking short positions at levels not seen in years. This extreme imbalance, Lee argues, rarely lasts and could flip rapidly. Pair this with Raoul Pal's banana zone thesis and PlanB's technical data, rising realized prices and widening moving average divergences, and it's clear: a major bullish phase is underway. The bullish sentiment is further confirmed by a wave of high-conviction moves from both whales and institutions. A recent $830 million long bet using 40x leverage by crypto whale James Wynn, along with nearly $7 billion in net inflows into U.S. spot Bitcoin ETFs since April, underscores surging confidence. Meanwhile, options traders on Deribit are placing bold bets that Bitcoin could hit $300,000 by June, and even more measured forecasts like Standard Chartered's $200,000 year-end target appear aggressive. Billionaires such as Kevin O'Leary and Binance co-founder CZ are amplifying this outlook, predicting Bitcoin could soar to between $500,000 and $1 million during this cycle, driven by institutional inflows, shifting government policies, and sovereign accumulation like El Salvador's. From macroeconomic sentiment to technical indicators and whale activity, all signs point in the same direction. Bitcoin's current cycle is not only alive but thriving. With momentum building, institutional adoption accelerating, and public conviction growing, the market is entering what many see as a high-voltage phase. Analysts like PlanB and Raoul believe the FOMO stage has begun, marked by reduced disbelief and intensified buying. As we move into the second half of 2025, the real question isn't whether Bitcoin will climb higher, it's how fast, how far, and who will have the nerve to ride it out. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.